presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Dave Root, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for joining in. 3 o'clock Friday, final hour of the trading week, and we got markets almost to the tick high, 66.02. How about it? 6,600 in the futures, up by 10 points right now, 0.2% higher. NASDAQ 100 up over 0.5% right now. You have Tesla driving some of this market. How about that? Up 7.2% higher right now. You jump around to some of the other, Amazon giving it back a bit, off by 0.8% right now. Apple up 1.8%. It's been interesting to see the divergence, right? Look at Microsoft, up by 2.25%. OpenAI, they've got a deal, the realignment, their nonprofit getting a $100 billion stake. That variable, that risk taken out of this equity, Microsoft up by 2.25% right now. Google up by 0.5%. The chip stocks, this NASDAQ, up by 0.3%. Broadcom, quite a volatile week, up by 0.6%. And the Paramount, Skydance, and Warner Brothers Discovery saga continues, up another 7% for Paramount. And Warner Brothers up another 18.5%. That's pushing the value of Warner Brothers. Can you imagine you're negotiating this and you're selling Warner Brothers Discovery? Who knows if they're selling, right? But my guess is everything has a price. And David Ellison and his father, Larry Ellison, they're coming for Warner Brothers. But imagine that you're negotiating that, and meanwhile the value of the equity just keeps going up. Well, you know that if you announce that somehow you don't put together a deal, this is going to collapse back. Okay, but 47.3 billion is now the number. We just traded from 12 to 19. A lot of that value. Okay, I mean, what they'll do if deals get done like this, right? They'll say, you know, the average trading price over the last 10, 14 trading days, something like that. They're not going to give them the average value of this volatility priced into what Paramount is going to pay. But one of the things going on out there is you might have a little bit of competition. And Warner Brothers now pushing $43 billion. You jump over to Paramount, Skydance, $20 billion. Now remember, they bought this company for 7.7, folks. 7.7. It's already a 200% return. The deal just closed. Now, the expectations are starting to build. 20 billion? Yeah. They're going to take on Warner Brothers. You think they're going to issue debt? The wealthiest people in the world, they love buying assets and they love debt. To what? To allow them to scale that up, right? Scale it up, add some debt on it. And of course, so now you're going to be approaching a company, but boy, you talk about some competition, man. Netflix got a value of over $500 billion. Paramount, Warner Brothers, they're not the global force that Netflix is, okay? But you better believe they're going to be a force. They're coming with it, man. They got Paramount, they got CBS. Listen, we own this equity and market insights, okay? There's your disclosure, but there's a reason why we do. I was joking with a friend. I talked about on this program. Disney for the first time, right? They started talking about Disney. You can get real Disney. You can get all those live games, Monday Night Football. Okay, I don't watch a lot of television, folks. Don't. I watch some Bloomberg, okay? That's definitely the most thing I watch is probably Bloomberg. Don't watch a lot of television. But you know what? Some things I do? Some live sports. A good Monday Night Football game, right? I get Tommy to bed. Maybe and you just, you're hanging out late, you watch a little football. And yeah, they got me to sign up. They have a decent product here. And nonetheless, hey, this market, beyond streaming, Amazon, though, struggling. Yeah. You check out Amazon, man. This market's caught some bids, and no. Since those Oracle numbers, okay, Tuesday night, there's a problem on Amazon right now. Jump over to Oracle shares today. Continuing to give back some of those gains. We're off by 4.3%. You're down to 294. And again, you came into their numbers at 242. Okay, so not quite the 40% gain you would hit at one point, giving back some of those gains. Jump over to yields. The 10-year sitting at about 4.06. Almost right back to where we were prior to the CPI numbers. 4.06. But how about the dollar weakness? Dollar at 97.57, man. We take a look at the daily. Yeah, you got some strength out here from the week of July 28th, the weekly, excuse me. But boy, we're pushing some critical levels here of dollar weakness. And you take a look at this chart, folks. Put it on a 5-year weekly. What's going to make the dollar stop here? Okay, think about where we are with rates, right? Where we are, and listen, we talked about real estate, okay? If you're in the market for a home, folks, I'd encourage you to try and run the calculations of waiting for those interest rates to go down. You know, a residential mortgage in America is one of the best things that you can ever buy. Why? Because it's basically an option, right? You have the option to hold that interest rate for 30 years. And yes, you pay closing costs, okay? And that's the risk. Because if you close and then 90 days later rates are 1.5% lower, yeah, it's going to cost you a lot of money. But guess what? It still makes sense to do it when you lock in a 30% guarantee. And the reason why I bring it up is rates are going lower, man. The dollar's under pressure right now. Dollar looks like it's on its way to 100. It was a one-way move from 115 to 90, from 90 to 115, okay? And we've gone from 110, we've paused at 97, and now the Fed's going to start 5 days from right now, folks. 25 basis points. They're going to go on September 17th. October 29th is the next meeting. 25 basis points. December 10th, the market still thinks there's an 80% chance by the time they get to December 10th, you get 75 basis points of cuts. Dollar's going to be under pressure. You can always refinance, okay? Maybe inflation's a problem and we don't get those types of problems. If inflation's a problem, it's going to be good that you hold assets like a house, okay? Rates are going to come down eventually. There's going to be pressure on them. And you can always refinance. And if we get people, okay, investors, not investors, homeowners, that can, you know, you're talking about right now, folks, 75 basis points of cuts over the next 90 days. The 10 years factored some of that in already. Mortgage rates are going to come down if that's the case, okay? And it is going to open up a seller's market, really, with the buyers coming in. It's going to open up the seller's market. But it's going to feel like a buyer's market for what you can afford when those rates come down. So consider getting ahead of that rush instead of waiting if you're going to take out the mortgage. Because what is your risk, right? If you really think that's going to happen, do you want to be competing with all those buyers out there? You don't want to be competing with everybody that's been sitting on the sidelines, that has cash, they've been renting, rent prices have been going up, and they're saying, man, I would really like to buy a starter home, whatever kind of home. So get ahead of that curve would be my opinion, because we got rates pushing lower. You got the dollar under pressure as well. Dollar, 97.57. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Welcome back, folks. S&P's up 6 points, just under 6,600, 65.98. And yeah, we got some gold flyers, man. How about that Vista Gold, folks? Up by another 14% to $1.81. You're up 22 pennies today alone, up by 14%. The daily on this, we just went from $1 to $1.81. You just doubled in price over the last 6 weeks, folks. Doubled in price over the last 6 weeks. We'll take a look at the weekly, and you're now at the 1 to 2.618 expansion. How about that? From the run that began at about 33 cents up to 82 cents, you pull back, and boy, you're blowing apart, and folks, you're doing it with volume. That's the most remarkable thing. Look at the weekly volume on this, okay? We're taking out everything. The biggest volume bar we have is that decline on June 2nd that's hanging out there, okay? But you got the highs on May 19th. Of 6.7 million. You do 6.3, but you blow it out with volume this week, right? You actually did it, which is just a huge number. You take a look at the daily on this thing. Look at today's volume. Now, we were talking about this a little bit from the morning program, talking about some of the winners out here. For those of you who have free shares. Folks, this equity is going from 30 cents to 180, right? 180 cents, $1.80 in the last year and a half. You've doubled in price over the last 6 weeks. You're up almost 300% from where you were at the beginning of the year. You can't make money if you never sell, okay? And there's nothing wrong with selling if you don't get all of the move. You're never going to get all of the move. One of the best things that I ever really came to grips with was not needing to get the bottom, not needing to get the top, knowing you're never going to do it. And if you're going to do it, you're going to miss out on everything, okay? You don't need the bottom. You wait for some momentum. Our man Dave White, what would he say? Sell when you can, not when you have to, okay? Doesn't mean this equity is not going to come out, and it could be a news-driven event. Sometimes you just don't know, okay? And that's not, some type of conspiracy theorist, but when you're dealing with equities like this, folks, that just double in value over 6 weeks, yeah, gold's a big part of that, okay? And their news is, too, their earnings event, okay, in the news. But this is quite a run, folks, okay? And even an equity like this, remember what happens to certain equities in this gold market, okay? Because you could have bought Vista at $75 in 93. You could have bought it at 47 in 96. You could have bought it at... And I own Vista, okay? I have a small position in Vista. There you go, jambalaya. If you want a little Vista action. Love it. But just be aware of the history, folks. You go back to 2016, this thing was up to $2 with volume, okay? You focus in on where we were in 2020, 2021, 2022, 2023. Yeah. And then this one is quite a run. Okay? You can't make money if you never sell, folks, because I know we got some tigers out there and tigresses that are in this thing. And hey, you know, you want to hold some shares? I don't blame you. I'm holding some, but there's no shame in getting out on some as well and getting some free shares at least, because this is quite a run. And we got gold pushing $4,000 in outs, folks. And yeah, we'll leave it at that. You jump over to gold. 36.85, up by 0.3%. And listen, I'm saying I think the dollar's going to be under pressure. And if the dollar's going to 90, then yeah, you better believe gold's going to have some pressure to the upside. Okay, the miners as well. But you take a look at these XAU charts, okay? 100 to 273 in the XAU. Now that looks great. You say, man, that's amazing. History is important, folks, okay? Many ebbs and flows. I mean, how quickly, even in 2022, you can almost get cut in half in the XAU, okay? Almost cut in half, right? XAU goes from 38 up to 171. XAU trades from 61 up to 165. It stays up there for about a year and a half and then gets cut in half. So a lot of cyclical nature in the gold equities, folks. And when you look at a stock like Vista, right? Sell when you can, not when you have to. Man, Dave White, love him, all right? Remember these days out here in June for you holders, holding on for dear life, hodling, Vista, all right, never letting go. Never quite explained what happened here. Okay, you got a lot of selling, that's what happened. This thing dropped out of bed, and you went from 120 down to 91 cents in 2 days, right? It's quite a run, folks. So if you're in some Vistas and you're thinking about selling anytime soon, and your position is large enough that you're considering selling anytime soon, considering selling some Vista at least. Can't go wrong when you know, if you got into it here anytime in a pretty reasonable past, okay, you're only talking about a few areas that you're not in like a double bagger instantly on that equity. One thing to remember, folks, is you're never going to sell at the high, right? There's always going to be that mental deal of, oh, I could have made more. And that's always going to come in any trade, okay? And set a stop on the downside if you want, okay? But remember that day in June, man. You were down 25% in the span of basically a day and a half of trading. So remember that day, because it was a quick one. EKS, man with the plan. Why not? Hey, you got a plan, you're holding for it, you got a price point, and hey, silver's looking strong, man. Take a look at the monthly on silver. I'm not even at the highs in silver, so don't tell me we can't even hit the highs, right? Yeah, the silver equities. Hecla had its run, and now First Majestic is having its run as well. It's taken out years of consolidation. But boy, you want a little lesson in highs and lows? Check out that chart of First Majestic. Hecla as well. All right, the roller coaster rides. Look at that roller coaster ride, man. All right, let's take a look at copper. Take a look at the daily. Copper continuing to rise a bit. You're getting higher highs, you're getting lower lows, higher lows. And we got some volume out there from September 2nd. We're coming into that area. Couldn't do it on volume, though. Take a look at Microsoft shares on that OpenAI news, up by about 2% right now. All right, on a weekly, not that impressive on volume. So remember, last week was only 4 trading days. You get just above that. So trading higher and a little bit lighter volume on Microsoft, even on that news, which is giving them a lift. Look at the weekly on Apple. Not exactly the event that they were looking for. All that volume on their event.
The Tom
Got volume at
O'Brien.
the lows. Volume at the lows. Watch out. Apple, though, up by 1.75% today, but we're not going to get that volume. Look at that. We're trading into that bar. We're trading into this gap, but not going to have the volume that we had on that low. Market up by 3. NASDAQ 100 up by 109. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. Markets trading lower from those highs. We're dipping down, positive by 2 on the S&Ps. NASDAQ up by 101. 4,119. The Dow in the red right now. And boy, you talk about interest rates, okay? How about $7 trillion? That's the money market funds in the U.S. alone, okay? $7 trillion wall of cash. Now, it should not be a worry, as in you better figure out what you want to do right now with this money, folks. Okay? Rates are still somewhat okay. All right? And I say that as in for savers out there, for fixed income, rates are still okay. You're talking about areas right now. I mean, I've talked about CD rates, okay? A brokered CD. You pull up a brokered CD, even with a Fidelity right now, you're looking at a 5-year ladder of almost 3.75%. Yeah, let me give you. Okay. These are the non-callable, okay, 5-year CD rates right now. Those are great rates, folks. Now, yes, we have 2.9% CPI, okay? You have 2.9% CPI. So one of the worries here is if you go out and you buy a 5-year CD at 3.7%, well, what happens if inflation starts going up, right? And you're locked that in. I mean, one of the areas I liked here, if you're in a retirement and you want some exposure just to CDs, you can always do a ladder. That way, every year, like even a 5-year ladder, every year you get to reset 20% of your portfolio in that 5-year ladder to gain access to the current 5-year CD rate, right? So if inflation's going up, you get to lock in a higher rate, etc. You're still at almost 3.7% right now, folks. Okay? That's a big number. That number could go down dramatically in the near future. It could also go up, all right? And broker CDs you can actually buy and sell. So it's not like you're locked in the same degree. But even when you look at the money market right now, okay, Fidelity's money market is paying 4% right now, 3.97. Their SPACs, Fidelity Government Money Market, they're paying 4% for cash sitting in your account, unused, not in equities, not in anything, okay? And there's $7 trillion of that around in different buckets that are basically cash equivalent investments, okay? Much of that money's institutional or emergency fund savings. It shouldn't be a worry, and I say that as in you can worry about it. Make the decision right now, because at least then if you're making a plan, etc., okay? Because, yeah, you don't want to get caught flat-footed, folks, with having all of those investments in a money market, banking on a 4% return, and that money going down. I mean, that money on a money market, folks, is about to drop 1 full percentage point, okay, in the next 4 to 5 months is what the market thinks. Do you have a plan for that? If you're okay with that and that's savings and you know that is your cash and you're going to keep it, then that's great. But if you don't have a plan and you're relying on that, I encourage you to think about locking in that rate in some capacity, or just figuring out what kind of investments are you going to go into. How are you going to use that money? Are you going to diversify in stocks? Are you going to buy a bond ETF? What are you going to do with it? Or are you okay with sitting in an account where it doesn't need to earn money? But that horizon is right here, right now. Okay, those 10 years, those CD rates that I just showed you, they were much closer to 4% even a month ago, right? And they're going to keep going down if the market gets what they think is going to happen. $7 trillion, man. Look how it's climbed. Quite a number. Even if you look at 2020, you were at 4.7. 2019, you were at almost 4. You're up to $7 trillion of money market funds. So for those doom and gloomers out there, things really start going rough. Yeah, this is not money that's, market astute trading money that's instantly going to be buying all the dips, folks, okay? But you better believe that it is to a certain degree, and that's the reason why the Fed will cut rates. You cut rates and capital's cheap and you're not getting anything on CDs and stocks are cheap because the market may be pulling back a bit. Yeah, and that's what they say as well, the difference of this money. Institutional and corporate cash, 60% of that market. Okay? That's 60% of the market, but you're still talking about trillions and trillions of dollars that you don't even include that. Take a look at this chart. Doesn't mean we're going back to zero, folks, but we're going down. Okay? We're going down, and that's kind of why I'm harping on real estate a lot right now. You know, I'm a builder, okay? I brought up the property I was selling this morning. I'll put it up there again. Let me see. Is that it? There it is, right there. Perfect. If you're looking for a beautiful property in St. Pete, folks, send me an email. Tommy@tfnn.com, 2230 Trelane Drive. This market's doing so well right now, folks, okay, that it's a good time to move, and it's only going to get better. That's the way I'm looking, which is why I'm still building. We have another properties, 2 new builds going in, and rates are going to come down. The only real risk here is that inflation rages, and they're going to have ammunition to hike if it does. And where do you think the bar is going to be under President Trump and a new chairman for the hiking campaign that would ensue? And if there's prices being raised to that degree, we've seen the way the President Trump's going to come after Walmart, right? And you're not bigger than the market, but it is a force, man. So in the short term, you better believe the pressure's going to be on lower rates right now, and it's coming right now. So don't be caught flat-footed if you have some money out there, okay? Because rates are going down, period. End of sentence, man. And to a degree, they're already factored into this market. But boy, they're going to come quickly. Goldman Sachs out there talking about 4 cuts. They think that the market right now thinks we're going to get 3 cuts through December, and then maybe we get a pause, okay? To bring it over. Market knows that we're cutting, 95% chance in 5 days, but you go out to December, down a bit from this morning, but 75% probability that we're cutting 3 times in a row by the December meeting. But then you go to January, and the market says, nah, we're going to stay. We're going to stay at 3.5%. Okay? We're going to wait, and we're going to wait till March to maybe shift lower. Well, Goldman Sachs says no. They're going in January too. Yeah, they're going 4 cuts in a row. Pressure's on for lower rates. We jump over to the home builders. Lennar, we get a little bit higher rates today. They're lower, though, down by 2%. Home builders giving back some of the gains. They've been on quite a run. S&P's negative by 4. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We jump over to Tesla shares. So Tesla up by 6.5% right now, $392. You jump over to Tesla, and yeah, the chair. Only Elon Musk can be the savior that we need in the next phase of this journey, folks. And she may be right. Hey, you know, to that company, he wasn't there. Poof, you want to see a free fall in an equity price. But yes, you're talking about the pay package recently and the tranches of where he needs to hit to reach those pay milestones. But nonetheless, she's saying he's the only one. But what if that doesn't even come in the form of being the CEO? Elon wants 25% of the company, of course, as he's been saying. And yeah, what happens after him, right? So, succession. There's contingency plan if Tesla suddenly need a new leader, and that there's a longer-term process for finding a true successor. We'll talk about saying nothing. We want to make sure we have the right leaders in place to do an orderly transition at some point. And so making that part of this plan was a very deliberate activity. You know, I saw some great commentary recently saying, can you imagine if he hit some of these tranches, right? And then they have to renegotiate that deal. And they're supposedly going to have, part of that deal is that he has to have some type of plan in place for succession to a certain degree. You think he's going to be held accountable if he's pushed that? And hey, that's the argument, right? It's up to 6.5 trillion, it's up to 8 trillion, but nonetheless, today, yeah, Tesla up another 6.7%, and we're pushing the upward boundary here. You know, you look at that day when he battled with the president, that was the low, 274. And you're doing it with volume today. Okay, 150 million, pushing higher, you're doing it with strength for Tesla. Yeah, Microsoft, not as much volume as you may expect, up by 1.9%. Some of the volatility, the volume, having to do with OpenAI and that deal getting done. And yeah, they were posting about this one in the Tiger's Den. Apple AI and search executive Robbie Walker to leave the company. Man, the shuffle for talent in these companies. One of Apple's iPhone makers' most senior AI executives. Where is he going? One of the few direct reports to the AI chief was in charge of Siri until earlier this year. One of the top Apple execs working on the AI-powered web search system. Senior director in charge of the company's Answers, Information, and Knowledge team. Yeah, nonetheless, he's out. Yeah, the shuffle of talent. So Amazon and Google, the FTC asking them about their advertising practices. whether they misled advertisers about the terms and pricing for ads on their websites. They want details about the auctions and whether it disclosed reserve pricing for some search ads. Can you imagine going into the back end of these companies, right? You know, I talk about one thing that should come out, NBC Peacock, right? They're one of the few services that, like, you leave a streaming going on your computer, folks. And I spend a lot of time in my office. And so I'm working, I'm watching a football game, something like that over the weekend, putting together a goal report. And then I'll just leave it up in the background and come back the next day, and they're just still running it. Why are they still running it? Because they're showing you ads in between. That's bad business. It's a conscious decision NBC, Comcast, is making to run their streaming all the time, okay? I saw an ad coming out today that you could sign up for Peacock for, I think it was $7 for 6 months. And that's why. But guess what? Who's that hurting? Advertisers, right? So you better believe in the back end. Are they showing it to everybody? Are they showing everything? I can't imagine what you could see when you get auction data of how it's being handled. Being conducted by the agency's Consumer Protection Unit, focus on whether the company's properly disclosed the terms and pricing for ads. It's a new front in regulatory scrutiny for Google and Amazon. Yeah, so Google sells search ads via automated auctions. They take place in less than a second after a user enters a query. Amazon hosts real-time auctions as well, sometimes known as sponsored listings that have ads within them, of course. And they want details, whether reserve pricing for some ads, price floors that advertisers must meet. Yeah, show me the details of why you're charging everybody what you're charging. And it's like a black box to a certain degree, right? And yeah, Amazon, Google, they make some big money on advertising. Amazon shares down by 0.9%. Google shares up by 0.2% right now. All right, Apple up by 1.6%. We jump to the chips. NVIDIA holding up well right now. Light on the volume, though. Look at the last couple of days. Quite an acceleration we got on Wednesday. Trading at 177.49 today. Check back on yields. All right, let's see what else we got going. So, Armani. Giorgio Armani. Everything's going to get sold off or broken up. Even so, he had no children. He had heirs, of course. And his will, though, instructs his heirs to gradually sell the company or to seek a listing if you don't get it done quick enough. Where does he prefer? LVMH, L'Oreal, and Luxottica among his preferred bidders, but also allows for the company in the fashion and luxury sector of equal standing. So he wants it sold to somebody legit, right? An industry leader. He wants that, he wants that brand to continue, man. Put it in a big hands that's never going to die. And the way it is that 15% of the company needs to be sold within 18 months, followed by a further 30 to 54.9% after 3 to 5 years. If you don't hit the second sale, the heirs must pursue an IPO. Yeah. So it's either private equity or it's going public equity, but it's getting pushed to different ownership as you got to sell it off. And yeah, Bernard Arnault, I'm sure he's will be a willing bidder to a certain degree for the Giorgio Armani brand. All right, folks, we got one more segment. Speaking of housing, jumping over to Restoration Hardware. Down by 3.7%. They were out with their numbers yesterday. And yeah, they revised the outlook. Growth, though, still 9 to 11%, but down from 10 to 13. Restoration Hardware at 219, down by 4%. One more segment, folks. Don't go away. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 2 points right now, just chopping around a bit coming into the close. We hit a high above 6,600 for the first time ever in futures right now. And yeah, you see a little bit of that bounce going. A little volatility coming into the closing bell for the week. And remember, we got Fed weeks next week. So we have a Fed meeting Wednesday. And yeah, all indications are they're going to cut. The market thinks they're going to cut. Goldman Sachs comes out and says, no, we think it's even going to be 4 times in a row. And today, we get a little lower price, higher yield. But even with that, the dollar can't find a bid, right? We're at 98 yesterday. We're pushing the lows of yesterday again today, even as we've gotten a little bit of a jump in yields with 97.59 and gold at 36.83. Silver with quite a day, up by 1.4%. Silver hits 43.04 early in the session. That's a new recent high for silver. All right, take a look at some of these silver stocks. Hecla up by 0.4% right now. First Majestic up another 1.4 after that acceleration yesterday. Vista, as I was talking about, on fire, still going higher, up by 15.4% for Vista right now. We were talking about New Gold on the morning program. New Gold right now, flat. One of the others. Got AEM on this run recently. Let's put it back on a weekly. Hey, and any time. It's not any individual equity, folks. It's all of them. There's your XAU, right? From 100. 1 to 1.618 this year alone. Almost a double bagger. HUI. Similar action. From 280 to 560. 100% from where we kicked off the year. Microsoft up by 1.9. Amazon off by 0.7%. Paramount Skydance, look at that, it's almost high to the tick. 1885. How much is Warner Brothers going to sell for, man? 16.8%. Yeah, we'll see that saga play out. Richest man in the world. Why not? Larry Ellison, Elon Musk. Tesla having quite a day. Folks, have a great weekend. Be safe out there. We'll see you Monday morning. Appreciate it so much. We'll see you Monday, folks. Be safe.
Build